Hey everyone, welcome back to TraderX. Today we're answering the most important beginner question: what exactly is technical analysis, TA? Technical analysis is the study of past price movements and volume to forecast future price direction. In simple words, we look at charts to see where price is likely to go next. 3 core beliefs behind technical analysis. 1. The market discounts everything. All news, earnings, wars, whale moves, everything is already baked into the current price. 2. Price moves in trends, up, down, or sideways. Once a trend starts, it tends to continue. 3. History tends to repeat itself. Human emotions, fear and greed, create the same patterns over and over, whether it's 1929 stocks, 2017 Bitcoin, or 2025 Forex pairs. That's why technical analysis works the same in Forex, crypto, and stocks, because it's driven by human psychology, not by company balance sheets. Why is technical analysis so important? Here's why 95% of professional traders, retail and institutional, use technical analysis every single day. Speed, news comes out, price moves instantly. Technical analysis shows you the reaction in real time. Works 24/7, crypto never sleeps, Forex runs Sunday to Friday, charts are always there. Universal language, same tools work on Bitcoin, gold, euro to US dollar, or Nvidia stock. Objective rules, no emotions, no guessing, what if the Fed says this, just clear levels and signals. Risk management, you always know exactly where your trade is wrong, stop loss below support. Example, when Elon tweets about Dogecoin price spikes before you even finish reading. But if you saw a breakout plus volume plus RSI overbought on the chart, you were already positioned or ready to fade it. People always ask, should I use fundamentals or technicals? Fundamentals answer, what should this asset be worth? Earnings, GDP, token utility. Technicals answer, what is the market willing to pay right now and where is it going next? Smart traders use both, but when you actually press the buy, sell button, you almost always use technical analysis for timing and price levels. 88. Real-life proof that technical analysis works across all markets. Look at this head and shoulders pattern. 2019 Bitcoin top crashed 50%. 2022 S&P 500 top bear market. 2023 pound sterling per USD perfect reversal. Same pattern, different assets, same result. That's the power of technical analysis. What we'll cover in this video. In the next few minutes you'll learn, 1. How to read any chart like a pro. 2. Trends, support and resistance. 3. The most powerful chart patterns. 4. Must-know indicators, and which ones actually work. 5. Volume, multiple time frames and risk management basics. Everything explained with real Forex, crypto, and stock examples, zero fluff. Alright, enough talking, let's jump into the charts and I'll show you exactly how to read price like the pros do. Section 1, How to read any chart in 10 seconds. First skill every trader must have, reading a chart instantly. There are only 3 chart types you'll ever use: line chart, just closing prices connected. Good for long-term trends, bad for details. Bar chart, shows open, high, low, close for each period. Japanese candlestick chart, the king of charts, 99% of pros use this. Pro move, zoom out to daily candles first. If you can't tell if it's up, down, or sideways in 5 seconds, keep zooming out until it's obvious. Section 2, Trends, the single most important concept. Rule number 1 in trading, the trend is your friend. There are only 3 possible trends: uptrend, higher highs plus higher lows. Draw green trend line connecting the lows. You only look for buys or wait. Downtrend, lower highs plus lower lows. Draw a red trend line connecting the highs. You only look for sells/shorts or wait. Sideways/range, price bouncing between two horizontal levels. Buy near support, sell near resistance, or stay out. Golden rule: never fight the trend on your trading timeframe. If daily is down but 5-minute looks like a buy, setup, skip it or wait for alignment. Section 3, Support and Resistance, the price magnets. Support equals floor where price keeps bouncing up. Resistance equals ceiling where price keeps getting rejected down. How to draw them correctly: look left, find at least 2 to 3 touches, the more touches, the stronger. Use bodies and wicks, not just one or the other. Round numbers matter: 1.2000 in Forex, $50,000 Bitcoin, $100 Tesla stock. Magic trick: when price finally breaks and closes beyond a level roll reversal. Old resistance becomes new support, and vice versa. This is where 90% of stop losses and entries happen. 4. Section 4, Multiple Timeframe Analysis plus Risk Management Basics. Before we wrap up, 2 absolutely critical basics that separate beginners from consistent traders: multiple timeframe analysis and risk management. First, multiple timeframe analysis: never trade looking at just one chart timeframe. Pros always use at least 2 to 3. Here's how it works step by step. Start with the higher timeframe, weekly or daily. This gives you the big picture direction and major trend. Then drop to a lower timeframe, 4 hour or 1 hour. This is for finding precise entry points. Example: on the daily chart, Bitcoin is in a clear uptrend with higher highs and higher lows. Switch to the 4-hour chart, wait for price to pull back to previous support, now acting as a floor. Enter your long trade there, with the trend on your side. This works the same in Forex, e.g. daily Euro to US dollar uptrend 4H pullback entry, or stocks, weekly Apple uptrend daily dip to moving average. Why? Trading against the higher timeframe trend is like swimming against the current. You might win short term, but you'll lose most trades. Now, risk management: this is what keeps you in the game long term. No matter how good your analysis, you'll have losing trades. The key is making sure losses are small and wins are bigger. Basics every trader must follow: always use a stop loss, a preset price where you exit if wrong. Ask yourself, where would this setup be invalid? Place it just below support, for longs, or above resistance, for shorts. Set a take-profit target, often at the next resistance or using a risk-reward ratio, e.g. risk 1% to make 2 to 3%. Position sizing: never risk more than 1 to 2% of your total account on one trade. Example: $10,000 account, max risk $100, $200 per trade. Adjust your lot size or shares accordingly. This way, even if you win only 50% of trades, you can still profit overall. Final summary plus quick intro to patterns and indicators plus call to action. Alright, let's quickly recap everything we've covered today: the true basics of technical analysis that work for Forex, crypto, and stocks. Read candlesticks, they show buyer/seller battles and sentiment. Identify the trend, up, down, or sideways. Trade with the trend. Mark support and resistance, key levels where price reacts. Use multiple time frames, higher for direction, lower for entries. Confirm with volume: rising volume equals strong moves. Always practice risk management: stop loss, 1 to 2% risk, good reward. That's the core foundation. Master these and you're already ahead of most beginners. Quick bonus: 2 more powerful tools you'll hear about a lot: chart patterns and indicators. Chart patterns are repeatable shapes formed by price action, like double tops/bottoms, head and shoulders, or triangles. They work because they reflect crowd psychology, fear and greed creating the same formations over and over. When you spot one completing, especially with a breakout on volume, it gives high probability signals for reversals or continuations. Super important for timing bigger moves. Technical indicators are mathematical calculations on price/volume, like moving averages, to smooth trends, RSI, to spot overbought/oversold, or MACD, for momentum. They don't predict the future but help confirm what price is already showing. Use just 2 to 3 reliable ones, too many cause confusion. Their power comes from combining them with price action, trends, and levels. Together, these build on the basics we learned today and make your analysis even stronger. We'll dive deeper in future videos. If this video cleared up technical analysis for you, please hit that like button, subscribe for more beginner-friendly trading content, and comment below, which market do you trade most, Forex, crypto, or stocks? Next video, we'll do live chart breakdowns together. Thanks for watching, trade smart, stay disciplined, and I'll see you soon.